National Bank for Financing Infrastructure and Development. Now see, this is also known as NABFID. So I will be referring to NABFID from here on. See, NABFID is a development finance institutions. See, for example, you require a loan to purchase a car, right? So you will go to the bank and bank will give you a loan. Now you require a loan to set up your business. You will again go to a bank, bank will give you a loan. Development finance institutions will be financing particular projects, particular loans which are in medium term. Say either having 1 to 5 years or large more than 5 years, right? They do not accept deposits from the public. They only give loans. They only finance. Correct? So from here we can understand they raise funds by borrowing from the government. So if we are talking about NABFID, the government will be guaranteeing for any loan which has been issued by the DFI or NABFID. So the government will be raising money for it. The insurance companies will be investing in this NABFID. The pension funds and sovereign funds will be investing in NABFID because these are all the funds. Here we have pension funds, insurance funds, governments which are investing in this fund, and this is going to NABFID, right? And NABFID is doing what? It is building houses for the poor. It is building roads. It is building highways. It is building railways, airports. So these are very large scale infrastructural projects. And after this, if I say this is a road, right? And roads we know have tolls. If you have gone on a highway, you know that there are various tolls. And for tolls, you need to recharge your FASTag accounts, or say you have to pay a small fee to use this particular highway. Now this is what? A payment. And these are the payment that these people are kind of interested in, so that they can get a return after the completion of this infrastructure project. Say this is an airport which has been constructed. Now this airport will be giving runways to the private aircrafts. They will be giving local stalls, right, to say brands who can sell their goods and services at airports. We have seen McDonald's, KFC's, and even international products which are being sold at airports, and they are very costly, right? So airports take rent from them. That is why they are very costly. They take rents in lakhs and lakhs of rupees, and this goes to the Airport Development Authority. And here, the airport, if they have taken loan from the NABFID, they will be returning the loan along with the interests, right? And this will be the interest, the profits, the rent that these people will be interested in, and that is why they will be investing in this, infrastructural projects. Apart from funds, they will be also offering expert guidance, expert advice, right? Technical assistance, right? So these are also the things that NABFID will be providing. Now, here the development is that the NABFID is aiming to disburse around 60,000 crores by the end of this fiscal year. And by now it has already lent 8,000 crores to build infrastructural projects. And let me tell you, the National Infrastructural Pipeline, which is trying to modernize India's infrastructure, has taken a substantial part of money from NABFID. Okay? And it is trying to sanction 1 lakh crore in loans, particularly in greenfield projects or projects which are totally new. Or say if you are building an airport, we are totally building from scratch. Say we are purchasing land, then we are hiring equipments, then we are properly building an airport. This is a greenfield investment which is starting from new. Then there are some brownfield investments also. Brownfield assets are those assets which are, say, constructed but not fully constructed. It has been halfly constructed. So those are brownfield assets. So it was set up in 2001, NABFID, and by the Act of Parliament known as National Bank for Financing Infrastructure and Development Act of 2021. Right, it is a DFI and it is financing country's infrastructural sector. So we have seen, and this is also regulated by the RBI as All India Financial Institution. Very important for your prelims. These All India Financial Institutions are very important because these finance some specific sectors of Indian economy. Like NABFID, this finance the infrastructural sector of Indian economy. There is the Exim Bank, which supports the trade sector of Indian economy because this gives loans to the traders, right? NABARD is very important for agricultural development in the rural areas, right? They give various capital assistance loans to the farmers, so the farmers can buy tractors, the farmers can have proper canals nearby their fields. So this is also important. And finally, the National Housing Bank is also there because this will financing the real estate sector in India, and the SIDBI is financing the small MSMEs, small industries that have potential to become big, or say that is having a huge employment generation potential in India, right? So these are all the all India financial institutions, and DFI is one of them.